NinjaTrader.com to get started today.
Well, welcome back to NinjaTrader Live. I'll be your host for this segment. I'm Tom Schneider, CMT with NinjaTrader, and this segment is Traders Workshop, where we like to bring in our NinjaTrader ecosystem partners so that they can share their expertise with you. Today, it's great to have back on the show Tiro Nagapan. How you doing, Tiro?
Hey Tom, always great to come back over here. Always enjoy our conversations and chart analysis and sharing with your audience. Yeah, really great to be back.
Yeah, good to see you. And it's a little bit sad we couldn't get together this summer, but it just, things change and we will get together. I know that'll happen. But how was your summer? We haven't seen you in a little bit.
Yeah, as I said, it's been a very busy summer.
Good.
We've had quite a lot of things going on. As I said, we went to one of these adventure activities for the kids and everything. So that was really great fun. It was about 50 of us. And then we also had a busy September. We just had Tom Basso. We interviewed Tom Basso. The market visit was interviewed by Jack Schwager. It's on our channel as well, youtube.com/MasterTheMarkets. So that was really good. I mean, it's amazing when you hang around such like-minded traders and see what they've done. I mean, yeah, so it's really a lot you can learn from them.
That's great. I just found out about it, so I'm going to check that out when we're done with the live stream. I'm sure that was a great conversation. Um, But it's great to talk to you. One thing I love about doing the segment is I learn from our NinjaTrader ecosystem partners, because everyone has their own history, everyone has their own take on the markets and what they've learned. And it's what I find what you did, and we've had you on several times, and you've explained kind of the journey, right? The how you came into the markets and what you found, and how you applied your own analysis and your own view of the markets, and turned it into a viable business that helps other traders. So, that's what, to me, what is so great about doing these segments, is because people like you, just expand the knowledge. So I really like your approach to the markets. I'm wondering if you could kind of maybe go over a little bit that, give a little recap of how you got into the markets and what your approach is.
Yeah, just a quick recap. I mean, after our epic interview, I'll mention it again, of 25,000 views that we did. I really love it. That we had. I'll show that a bit later on that people can revisit. But for those of them joining new, just a little bit recap. I started off as a cardiovascular pharmacologist, totally different sector, and then turn of events. Got into trading, wanted to make money work for me. I didn't want to be in the rat race forever. But I applied all the research analytics that we used to do in the science labs in pharmacology back onto the markets. So I got very fascinated by the markets, worked on a trading floor for a bit for 2 years, left that. Then we set up MasterTheMarkets in 2010. It's been a long time now, over 14 years we've been doing this with the company. Something unique about us, we always thought right from the beginning, is we just don't want to be reporters, just people who just share training knowledge. We want to be traders first, and then we want to teach people. So we built a company all based on that kind of philosophy, where we research the markets, then we apply it on the trading front first, see what works. Then we share it on the educational front, which is Master the Markets. So that's just quite a little bit of an overview. And most of our learning, actually, Tom, as we have talked about in our previous 4 interviews and webinars, is that it's mainly quant based. We were taught by quants, institutional quants. And that's how we look at the markets. And the good part, which I liked when they taught me that, it was very systematic, very methodological, and not only was rigid, it can be applied to any other strategy or any other kind of way that you're looking at the markets, because it's mapping the exact nature in which markets move, which is cycles.
Yeah, and that approach, right? Methodical approach is what I really find appealing, right? If you're a numbers person like I am, if you're analytical, if you like to solve problems, or you just are, interested in how things behave, this is it. This is you took kind of a like you said, a quantum view at this, right? Quantitative analysis. I say quantum, it's really quantitative analysis. But you took this higher level approach to kind of identify and see what those patterns are. And the cycles, the patterns, it's all kind of the same thing. It's human behavior evidencing itself in the price, right? And so how can we dissect that? How can we see these patterns? That's what I love about this approach.
Absolutely. And you know what? I think I'll show that on the charts. And then, like you said, we will do like a recap as well. And
Hmm.
then we'll go through some of the main core concepts. So perhaps I'll start off with, I know gold is a lot on topic right now.
Yep.
And I can show that also on crude and the 6P, the GP USD. I think before, just a little bit of reference. I think I had some of the videos. So these are some of the things that the viewers can watch. The epic one that we did, Tom, I never forget it. The first one, 25,000 views, and then with Jim was 13,000. So they all can catch that at their own time, and also on our channel, youtube.com/masterthemarkets. Highly recommend you guys to watch the interview by Tom Basso, right? So with that said, let's go on to today to give them a reference point of to go in detail. Let me just bring up this. Let me increase this one here. That's great. So here I am on the gold contract futures for December. So the first thing what we usually will do is we look at the trend and the phase, right? So in here you can see that's been quantified for you. So that's an uptrend over here. And then the phase. I mean, I had a question early on today when I had a session is how do you actually define the phase? There's only two types of phases when there's a trend. It's either a phase one or a phase two. In this case, it's a phase one. So let me explain this. Now, whatever we usually teach, Tom, which we have talked about in our previous interviews, is that it's cross-transferable. It's not a rigid kind of a structure. It can be applied to any kind of instrument, time frame, strategy, or whatsoever. So because it's following the nature of markets, we all agree, right? I mean, everybody watching this or watching the recording or traded before you, they all will agree that price never moves in a straight line, right? It never does. I mean, if it did, we all be billionaires today, right?
Right.
Getting anywhere and we just keep going in a straight line. So that's the first thing. So if it doesn't move in a straight line, I mean, this doesn't matter whether it's crypto, whether it's gold, whether it's commodity, whether it's currency, doesn't matter. It will never move in a straight line. If it does not move in a straight line, principle number two is that it will move in cycles. If it moves in cycles, then you and I know that inevitably principle number three happens, which is it will form some tops and bottoms, right? Or turning points. You can call them turning points, whatever you want to call them. But they will either be a top or a bottom. Now, because of that turning points, inevitably what happens is that in the market, how the quants then compress it. This is the unique thing about quants. They like to compress it into two levels of looking at it or three levels of looking at it. So what they did is that they said, okay, if the tops and bottoms are formed, if cycles, if that's the way that markets move in cycles, then tops or bottoms are formed. Then if tops or bottoms are formed, then there's only two types of moves that can happen in the market at any point of time, which is principle number four, which is it can only either be a bottom to top move or a top to bottom move, right? Once you have done number one, which is quantify what a top and bottom is, this is what we call the structure, the market structure. So this is what then they realized. So then they went on to then say, okay, if there's only two types of moves, bottom to top, okay, let me find out how much distance is there in a bottom to top or top to bottom. And let me get that all into a data and then arrange it in a probability table so that whenever I enter, I will know how much move is left, which is also known as open equity. Now, before I go into that a bit more deeper, I'll just come back into uptrend phase ones first, into market structure, then we can go on to the second part. So in terms of the bottom to top or top to bottom, once I've defined the trend, I mean, the trend, as we all know, is that most people know the definition, right? So it's a higher high. And then if this makes a higher low as well in relation to this reference low, then it becomes an uptrend. Now, what is the phase one Malaki then about? So the phase one is about, right? So it's when it's in alignment with the trend, right? So in this case, the bottom to top is going up and it's the same direction as the uptrend. So that's called uptrend phase one. Now, when it then comes against you, you can call that counter trend or retracement, profit taking, whatever you want to call it. In that counter trend move, because it's going against the trend, then it's phase two, right? So at the moment in gold, as we can see with this quantified structure, what we got, market structure, is that we got the bottom confirmation of the blue arrow and the blue dot, where this bar confirmed that bottom with the formulas that we've identified. Then you can then see that at this point, it confirmed its direction with the trend. So it's a phase one at the moment. Okay. But when this, let's say, if this selling continues, right? So this, if you observe, and everybody listening in as well, if they observe, you see, this is the exact specific scenario that can happen in any time frame, right? Which is, okay, you are in a nice upward move, phase one, all good, Tiru, right? Oh my God, this is happening now, right? Your profit is diminishing, right? Unless you haven't exited, this is all still open profit. It's unrealized, right? So the real question for a trader when we are in the position is, if I were to draw the point of entry, so the quant traders always thought about in this way, okay, where did you enter? So that's your point of entry, right? So where I've drawn the line there, your point of entry. So when this happens, okay, your open profit was up to here. The maximum open profit was up to there. Let's call it maybe $1,500, right? Now the selling is happening, isn't it? Now, when the selling is happening, that diminishes, right? It's coming more and more near to your entry point, right? To 0 point. So around here, let's call it maybe now you're halfway down, maybe 750, right? Now, the question in everybody's mind will be, oh, hang on a minute. Is it going to go further down, right? And going to go below my point of entry, which is crazy. And then I'll start to see red numbers, which is still unrealized, by the way, until you get out or until it hits your stop loss, initial stop loss. Or is it going to reverse back and then take that out and then carry on with its phase one move? So there's only two questions really here then, if you really understand market structure and all of this is this selling at the moment that we are seeing where the open profit is diminishing, is it going to go further down and confirm the top according to our market structure? Because this is the only two things the market can do, right? Either make a top, right, and confirm a phase two in this example, or it can continue further in its current direction or bottom to top, which is a phase one, and shoot up further. You see, the crazy thing is, whatever analysis that you're doing and whatever that you have learned from everywhere online, from the books, only comes down to answering these two questions. If you're using volume, if you're using stochastic, if you're using RSI, order flow, whatever it is, it comes down to this, right? Is that phase one move going to carry on further past that red bar selling, right? And continue on with its phase one, or is it going to go further down and become a phase two? So that's all it comes down to. So that's what I would say the first part is. With the market structure, you can get the phase ones or phase two.
Okay, so a couple things. all great explanations, of course, and the wave nature of the market's really well explained. The one way I think of phase one, phase two is kind of advance and correction, right? If you were talking Elliott wave theory, they have, a definite, like, a lot more rules than that, but
Correct.
or more than just a definition of an advance, right? They have advancing waves, corrective waves. Phase one is the advance. It continues in the trend. This could be on the downside too, just for clarification. You could be in a downtrend, and that
Right.
phase one phase would extend that trend further, is kind of the thought, right? Because you're continuing in that trend.
Spot on. And
And
I
and
think, yeah,
and the corrective wave or the corrective trend doesn't extend back. It doesn't kind of reverse the trend. So a corrective wave here, if we're thinking that this is going to go into phase two mode,
correct.
well, it could still go down to, let's say, your trailing dots, your
Yes.
uh, a support line that you might have, and still be in an uptrend, and at some point that uptrend might be disqualified if we extend past, let's say, another level. I don't want to get too ahead of what you might say. But the other thing I wanted to say, Tiro, is with this, because we look at different tools together, right? We want
Mm,
confirmation, we don't want to look at things in a vacuum. And certainly this is complex, right? It's not a simple indicator. So I'm not saying that you couldn't look at this alone. But what I see as a technician is I see kind of a flag pattern happening right now, right? You've got this flagpole that's straight up almost in two bars. And then you've got that lower set of highs and higher set of lows, right?
mm.
So in my mind, I'm thinking this is an extension. This is a continuation pattern. um, could that help, if we get, maybe a pullback in the RSI, but it's still not below 70, whatever it is, you could combine this with other indicators that as a trader you might have felt more secure, and you can see what your analysis about a wave pattern jives with what other indicators you might use yourself.
I mean, absolutely, that's right. So, the thing is, I mean, is it going to carry on further and all of that? And that's what it comes down to, really, isn't it, Tom? I
Hmm.
mean, all the analysis, right? From here, is it going to come out of that flag pattern? Is it going to go further up and continue in its phase one? Or is it going to confirm a phase two? And then at some point, when you get another signal, then is it going to still maintain its trend and go up in the phase one? So to answer all of that, what the quant traders then also did, and this is where the selection comes in, which one of those ones are going to be the big runners? And that's when we use other indicators.
Hmm.
And that's when this thing is not a rigid framework. It becomes very flexible to be used in conjunction with any other indicator or strategy, right? But the first part I just wanted to drive to the viewers is always know what trend you're in and what phase you're in. And that can be confirmed to you with market structure, okay, which is what we have quantified here, which most places online, they haven't quantified what the top and bottom is, which is what's missing extensively out there. Now, then the first one, but to get the phase one in a quantitative manner, you need to quantify what the top and bottom is, which is what we have done. Now, the next part then is, once I know this is in a phase one, right? And most of our entries will be on the close of the confirmation bar, right? Which is over here. Now, after that, if I do want to trade that, then I also then start to take a look at the volatility. How much, one of the interviews we talked about it, how much of a dance will it do? How much of it will it go against you before it carries on with its phase one?
Hmm.
Right? And that's where then I will place my initial stop loss. So let me see if I can pull this up. So I've got it all on a spreadsheet. Let me pull it to this other screen here. So I put this all together here yesterday. So if I take a look now on the MAE tables, which is how much it goes against you, then you can see for gold, right, on a daily time frame, right, we usually will look at the 98% number. So you see on a 95 or 99, you can see 1.5 ATR. This is all in ATR, by the way, right, on the daily time frame. What this means is, Tom, when I place my stop loss 1.5 ATR away from my point of entry, right? So if I go back to here, so when I place my see we usually enter here, right? That's where all the stats is built from, on the
Right.
close of the confirmation bar. So from here, if I place my stop loss 1.5 ATR away, so let's say 1.5 is about here. If I place it around there, then 98% of the time I won't get stopped out,
Correct.
right? So by that way, I'm convinced that when this dance happens, I'm not worrying that it's going to hit my initial stop loss,
Right.
right? So these are all just noise for me, for it to carry on further in its phase one. Now, in the event that it doesn't, at some point, then it confirms its top, right? With an orange arrow and orange dot, then that is my exit signal because the phase one move has ended according to this structure,
Okay.
right? Remember, this is a framework. This is market structure, right? So it's not an a rigid structure or holy grail or whatever. It's just a structure. It's a framework,
Sure.
right?
So just to further clarify to those who are new, ATR, when Tira talks about ATR, it's average true range. And so average true range is a great measure of volatility. And in this case, 1.5 times what that average true range, it's kind of giving a cushion saying if the market trades on average, let's say gold, I don't have it in front of me, but let's say uh, gold trades on average 50 handles, ATR of 1.5 would be 75 handles. So in order to hit your stop, it would have to be a pretty big trading day. And again, I don't have those numbers in front of me, so it might be different, but that's the thought behind it.
Spot on. That's right. Absolutely. You nailed it, right, Tom? This is one of the best things I like. I always say you're one of the best students I've
Oh,
got. You get it just straight away. So,
it's
so
it's
as
the
I said,
teacher, not the student here.
well, so coming back then, so the first step is as I said, get the phase one, and three simple steps to follow the smart money, I would say. Get the phase one. It's very simple. Get the phase one. Second step is then I would say get your volatility numbers right, which is your MAE, right? How much does it go against you before going towards your target? It's your
Mhm.
second step. Now you can do that on any time frame. We're just doing it on daily at the moment, right? You can do this on 4 hour, 1 hour, 15 minute, 5 minute, doesn't matter. You can get the MAE numbers everywhere. We've coded it, right?
Mhm.
Now, then the final part I would say is where do you get out? Because that's where the money is made, right? So on an open equity basis, right? So on an open equity basis, so if you take a look over here, I got the OE tables. So if I go on to gold over here, I can take a look over here, right? So if I believe that that selection of the phase one that I've done, if it's correlating on higher time frames also, I can go for the 180R, which will hit it 50% of the time. But
Gotcha.
usually for phase ones, it will hit about 10% more, which will be about 65% of the time we'll get there, right? And then if I want to get a bigger runner, which then correlates with more time frames and supported by volume also, I can take a bigger distance, right? So now this is if you want to put a target, right, based on OE. I got some traders and we got some strategies where we won't put a target. We call them the moon runners, right? They run to the moon.
Yeah.
So we won't we
You're
won't put a
speaking my
target.
language.
Right, there
I
you
like
go.
this.
So everybody wants to catch that, but as you can see from the table, it only happens less than 5% of the time, right?
Right.
So you got to set your expectations right. So you can let them keep running until you get an opposite confirmation where the phase one has ended. So that's another way of designing a strategy to capture the moon runners if you don't want to put any targets. Because I know some traders like Gavin and all that who trade with the trade guider and the VSA thing, he doesn't like to put a target, right? So those kind of strategies can be constructed, and the stats can be used as a guideline. So, and to capture the moon runners, the main thing with market structure is selection, right? Which of those ones are going to be the moon runners, right? Is it going to be this blue dot, that blue dot, or is it uptrend or downtrend? And that's where all the other indicators come. And that's why we team a lot with Trade Guider, the volume principles, and all of that to see. And whenever we get a signal along, is the volume confirming? Is the higher time frame confirming? Is there any nearby resistance on the higher time frames? And all these are principles you can be applied even on 15-minute, 1 hour, 4 hour time frames and all of that. So that's what I would say in the simple thing over here that we got, and I know time is running out, in these 3 simple steps to follow the smart money, I would say get your market structure right, find out if it's in a phase one. Second thing is find out your MAE, how much does it go against you before going to your target. The third thing is have an OE number, even as a guideline if you don't want to set it as a target, whether it's going to be your 80% open equity distance or 50% or 20%, whatever it is. That's what I would say as a 3 simple steps.
Well, I like that. And the OE is, how far along that move we are, right? And how much is really left, right? Oh, it's open
Spot on.
equity, right?
Because, yeah, because as you know, Tom, just in a swing, right? I mean, you can never keep going in a straight line, isn't it? If the
Right.
confirmation came here, of course, you got more move left from that point. But if you're going to enter here, it's going to be very less move left, isn't it?
Right. Right. And it helps you identify if this is a trade worth even getting into, right?
Spot on.
Yeah.
Absolutely. That's
Yeah.
right.
Well, Tiru, this has been great. I know we mentioned your YouTube channel, but let's bring that up again, maybe if we can. Where else can people find you? Your website, the YouTube channel, everything else.
Yeah, I think I would say the main thing where they can find all this in detail would be 7 steps to ctp.com. So if one of the team members can put that in, that'd be great into the channel. So that's where, once they put their name, email, and number if they want, they will get 7 videos and then they can go through it in much more detail. So we go through each one of them as we spoke in the Society of Technical Analysis. Actually, one more thing I forgot to mention as well, we just got invited to also write up their training programs for automation side of systems as well. So
Oh, great.
I'll be lecturing over there too. The other thing is, I did want to mention also that, yeah, we have got the automation side of things. We'll be publishing it in NinjaTrader very soon. This is on the cable. This is just for um, about 6 years that we've got. Just on one strategy, 80% open equity, and that's about 14,000. That comes to about 2.5, 3% per year, actually. Just on one strategy, one instrument, end of day, set and forget. But this is all based on all the principles what I've just talked about, just on phase ones. But if you want to find out more about this, yeah, I would say the best place is 7steps to ctp.com.
Awesome. Tiru, thanks so much. Great to have you back, and we'll have you back on a couple weeks to see what we can do in the next steps.
Definitely. It was very good coming back in. Thanks, Tom.
Oh, thanks to you. And we will take a quick break. Jim will be back to wrap up with Trader Merlin. Stay tuned.